Israel launched attacks on Iran's nuclear facilities. They targeted their nuclear program and military leadership, killing top figures. Things have been picking up and escalating in the Middle East, causing a lot of volatility in the markets. Hi, my name is Alan Perez, currency trader and market analyst for A1 Trading. In this video, I'm going to show you how you can navigate these volatile markets safely and potentially take opportunity from them. I'll break down how we can determine which environment we're in, what currency pairs are the best, and at the end of the video, I'll share 3 tips to help you better navigate this current environment. Now, usually when there's a lot of volatility in the market, it's usually because we're shifting environments, whether going from a risk off to a risk on environment or risk on to risk off environment. And it's really important to know which environment we're currently in. That way you know which assets are going to perform well and which ones are going to underperform. So looking at the Edge Finder here, there's actually a tab that shows you which way we're going or which way we're currently at. So in the Edge Finder, if you go down here to the risk on risk off gauge, you can see, on the daily right here, which environment we're in. Is showing right now risk off, and it also shows you which assets perform really, really well in these situations. So the very usual Swiss, yen, gold, US dollar are very, very much regarded as safe havens in environments like this, where there's war, where there's tension, where there's geopolitical risk. Those are the 4 really good investments that investors flock to when times are uncertain. And you can see on the contrary, Australian dollar, Euro dollar, Canadian, New Zealand, gold, well, gold not so much, but the S&P 500, equities, those are risk on assets. So when things get really uncertain, those inflows leave those assets and go into the Swiss, the yen, the US dollar, and gold. Now, recently in the past, with all this tariffs with Trump and going on with the globe, the US dollar has actually been fading off of this, right? For various reasons, maybe the economic health of the US has not been as great as other, currencies like the pound and the New Zealand dollar have really been thriving. Also, now that traders are starting to price in those rate cuts as soon as September, there's a lot of reasons why the dollar has been seeing a little bit of a fade. And if we see here, the news happened at around 8 p.m. Eastern time. And so the dollar was fading before this, right? As usual, that was the trend for the dollar. And then come 8 p.m., the dollar actually rallied from bottom to top 1%. Traditionally, the dollar is a safe haven in times of war. And so we saw that initially when the news hit the terminal or hit the globe, the dollar went ahead and regained that title and went ahead and rallied up here a lot, 1% in a matter of a couple hours, which is a really big gain. Oil was also a beneficiary of this recent news catalyst. So we can see that oil was rallying here, and usually this is the typical kind of price action that you'll see when there's geopolitical tensions in the world. Oil tends to go ahead and spike up, and oil as well from bottom to top went ahead and topped out at 12%, pulled back a little bit, and then we closed out with this big candle here to the upside. So I'm curious to see if this is a top here. Now, if things continue to get worse, then I could see oil at least revisiting this level here. If they progress and there's an all-out war with other countries getting involved, we could see oil kind of go into the 80 level. Or, if things start to settle down, people calm down, negotiations are made, we could see that this is the top for oil, and we could start to fade down back into these pre-news levels here around the $69-68, even as low as the $64 handle. That was before this big breakout that we saw in oil.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Another good chart that we like to reference as traders here to measure volatility and measure risk on or risk off is the VIX, right? We all remember the April 2nd tariff announcement, the 50% reciprocal tariffs, how that caused this big spike in the VIX. We got down up to the 60s And now we got a little bit of a spike in the VIX, not as high, right? But we did kind of spike up a little bit. So if we see an elevated VIX, if we get above the mid 20s, 25s or above here, spiking up to these levels, then we will continue to see those volatile movements and continued heavy price action in the direction that we're currently going in. So for risk on assets, continuation to the downside, and for risk off assets, continuation to the upside. So I'm going to go back to this chart here. Now that we know that we are in a risk off environment, we can see -6 here to the risk off level, pretty much maxing that out. And we know which assets really perform well in this environment. We can now know which assets to buy. And if we look at the contrary, risk off, we know that these assets perform poorly. Australia, Euro, New Zealand, the S&P 500, Canadian dollar. We can go ahead and sell those assets. Now, the beauty about currency trading or Forex trading is that you're considering two pairs, two economies in the equation. So you're buying one and selling the other. Now, in order to get the best profitable move or more lucrative move out of a trade, you want to buy the strongest and sell the weakest currency. So we can take that information and find which assets perform really well, like we just did, and find the ones that perform really bad, match those two together to get the biggest divergence, the biggest spread, and then trade those assets. So we'll go ahead and look at that information and see how we can go ahead and use the Edge Finder first to scan all that. That way we don't have to do too much work on our end, and then match those, look at the technicals and see if there's even a chance to go ahead and trade those pairs. So this is what I'm going to go ahead and do. So we're going to create this list here. Now that we know, which assets are doing risk. So we're going to have two sides, risk off and risk on. And then on one side, we're going to have, so risk off. What does really well on risk off? US dollar, JPY, Swiss, gold. And on the opposite side, we're going to see what does really well on risk on. New Zealand, Australia, Euro, Pound, CAD. But we're going to talk about CAD in specific here a little bit. I'm going to give you guys a nice tip for the Canadian dollar that you guys can go ahead and implement during this environment here. So risk off versus risk on, we kind of know what we're talking about here. And if we kind of look at the side, we can look at how the week ended relative strength, right? We saw that Australia did really bad, Euro did bad. These all did really bad, but which one of those performed the worst? We see that New Zealand dollar performed the worst. Now, this is where things get really interesting. We have dollar yen. Those are both safe havens. Dollar Swiss, those are both safe havens. But look at dollar CAD. Dollar CAD went ahead and finished off lower. Why is that? And I'm going to tell you right now why. The Canadian dollar to some degree is correlated to oil. And if we remember that oil did really, really well, we spiked up 12%. Canadian dollar being tied to that was the reason why the dollar Canadian was actually finishing a little bit slightly in the red. And so that's one of the things that I am going to consider trading. And if you are in the signals group, in the signals channel in the VIP Discord, I did went ahead and share a trade on how I traded the Canadian dollar, and it's currently sitting a little bit in profit. So we'll see how that one goes. Nothing's for certain. If things kind of come down and negotiations happen, or the tensions if the tensions start to fade off, then that trade will start to underperform. But for now, we are doing pretty well on that front. And if you haven't been in the VIP Discord, I definitely consider joining if you want to learn more about currencies and earn and learn on the way. I'll be more than happy to help you guys. I'm always open and I'm always available in the chats for anyone. I love this stuff. I love giving back, and this is my way to do it. So consider that there. But back to what we were talking about. So we can kind of match these pairs, right? If we know that the dollar is a safe haven and that the New Zealand dollar performed the worst, perhaps we can trade New Zealand dollar, US dollar, right? Same thing for any of these other currency pairs. You can trade You can sell Australia dollar, buy the yen, or sell Australian dollar, buy the US dollar, sell Australian dollar, buy the Swiss franc. You can do it any which way. But also to the Canadian dollar, now that we know that it's really strong, we can isolate the fact that this is super weak, risk off, and capitalize on the Canadian dollar being really strong because oil's really, really strong as well. And so that's pretty much what I did. So now that we know which pairs pretty much work, right? Which ones are the best, you kind of isolated or figured out you want to buy a strong one, sell a weak one, we can go to our edge finder to go ahead and see if that validates what we're thinking, right? So for example, you don't want to buy something like dollar Swiss because those are two safe havens, right? The price action could be choppy, could be flat. It's not going to be the very best one you can pick. But we did determine that New Zealand dollar was a good one, right? We can kind of solidify that. We did solidify that New Zealand CAD is a good one. We can solidify that by looking at the edge finder. It's getting a bearish reading, right? We also saw that the dollar was a safe haven, but that oil correlation to the Canadian dollar really pushed this one down. Now, because we're in a very sentiment driven environment, we can actually go to the top set of sentiment page and confirm that further. And what do you know, New Zealand CAD here to the downside, bearish pressure. So that's a really good resource that we have at our disposal. We can look at the simple, we can look at the original top setups. I'm really interested to see how that one looks like. Look at that original OG top setups that considers the technicals, the sentiment, the economic data, right? This one's showing that New Zealand CAD is the -6 bearish reading. Actually not that bad. Look at Australian CAD as well, pretty much similar to the New Zealand, showing a -10 bearish reading. So those two are the most lucrative ones in this current environment, where you have risk on being sold, and you have the oil correlation, the bullish momentum of oil kind of pushing it upwards as well. So that is how I would approach this environment. So let's go ahead and look at the technical chart to see how you can really put this into effect. So we'll do, there's a couple different ones, right? If you're looking at New Zealand dollar, US dollar, that is basically betting the risk on, selling risk on, buying risk off, right? The dollar safe haven. This is something I would look for, right? We are currently at a level of support. This was support for a little bit. We broke out, we stayed above it here. We have this upward trend line. If we go ahead and do something like this, break, retest, continue to the downside, that is a good trade to take. Now, given that is only if tensions continue to stay where they're at, or if they get worse, right? Then this sentiment, this environment continues to stay in play. New Zealand dollar, Canadian dollar, same thing. This level was a support level, right? Now I'm looking to see if it breaks, retest, turns into resistance, then we can at least target this level of support. And the cool thing about this one, technically speaking here, if we put these moving averages, we are below the 200-day and the 50-day moving average. And I like to target this level here. Currencies, they range, mean reversion. So I'm not even looking to go all the way down. I'm looking to target maybe somewhere around the 50% or 61% retracement level. Revisiting the New Zealand US dollar, we'll use the same technical moving averages here. If we break this level, retest and stay below, we'll actually be below the 50-day moving average, and I'll be targeting this same thing and not the whole thing. I don't want to get too greedy here, but I want to target at least this 200-day moving average. And if you stuck to the end of this video, I want to leave you with 3 tips for you guys so you can navigate this market safely, take advantage of it, have some opportunity. But at the end of the day, I always preach that you want to trade to live another day. And so the 3 tips would be to 1, reduce your risk, right? These markets are volatile, things can happen. The sentiment can shift at just a one statement's notice. All it takes is one person to say something, someone with power to say things are progressing or the thing's gonna end, and that will go ahead and shift the sentiment and stop the flows and reverse them to the other direction. Tip number 2, would be to widen your stop loss. So when there's lots of volatility markets, the movements tend to get wider and bigger, and so adjust your stop loss accordingly. That way you can, whenever you are in a trade, you can actually absorb the volatility, stay in the trade, and let your trade work out. Tip number 3, buy or sell at discounted levels. So if you're wanting to take a trade to the long side, wait for a discounted level. You don't want to chase price, right? If price has already moved, for example, in oil, if the oil market has already appreciated 12%, you don't want to buy the top, because now you have all that risk to the downside, especially if something changes, sentiment shifts, now you're really at a loss. Same thing for selling, right? You want to make sure you're selling. If you're going to the downside, you sell at a premium level. That way your risk to reward stays nice and tight, or your risk to reward stays nice, and you're not taking those hits if sentiment reverses on you. So thank you guys so much for watching. Trade safely. Have a blessed one, guys. Bye-bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.